The uncertainty of Donald Trump's fast approaching Liberation Day sent stock markets swinging wildly again. The White House is set to announce sweeping import taxes or tariffs in the coming days, which the president has warned will affect all countries. Zane Small has the details.
Celebrations can quickly turn sour at the New York Stock Exchange when the president threatens every nation with import taxes.
You'd start with all countries, so let's see what happens.
The world will find out what happens on April the 2nd, a day Donald Trump has dubbed Liberation Day.
The term I like best probably is the liberation of America. It's a liberation of this country.
The uncertainty of what's to come sent stock markets swinging sharply. The S&P 500, which represents 500 leading listed companies, has suffered its biggest quarterly loss since 2022.
The bumpiness in markets is due once again to tariffs and the markets trying to figure out what is going to happen next. On Wednesday, Donald Trump is supposed to announce another round of tariffs.
The White House expects to raise $100 billion in revenue from the tariffs and hopes to encourage local manufacturing.
You have a 100% tariff from India on American agricultural products. You have nearly a 300% tariff from Canada on American butter and American cheese. This makes it virtually impossible for American products to be imported into these markets.
But economists at Goldman Sachs have now upgraded the likelihood of a US recession to 35% as consumer confidence falls.
The challenge for American consumers is they may find a lot of the things that they buy go up in price because there is this tax being levied at the border.
The US is now New Zealand's second largest export market. It's been steadily increasing, so if American demand dries up, our exporters will feel the financial pinch, especially if agricultural products are targeted with tariffs.
We generally have quite low tariffs anyway, so when Donald Trump is looking at how's New Zealand doing compared to the US, look, we're on that side where things look relatively low and we may not get targeted too much.
Even if New Zealand is spared from US tariffs, as a small open nation reliant on frictionless trade, the economy is likely to be indirectly affected. Not so great when New Zealand has just crawled out of recession.
We're likely to get a combination of selling less to the US or making a lower margin on those goods.
With post-pandemic price inflation easing and interest rates trending down, the New Zealand property report out today shows an increase in listings.
What we have seen more recently is over 7,500 more homes on the market than there was this time last year. We're starting to see some green shoots.
But the continuation of that momentum may depend on what's to come on Trump's Liberation Day.
So, Zane, you mentioned momentum there in the housing market, and there are some other positive signs too.
That's right. The latest data from Centrix shows a reduction in missed mortgage payments. There were 23,000 reported past due in February, still relatively high, but that was down 400 compared to the previous month, and that likely reflects lower interest rates. However, it's still looking pretty tough out there for businesses. 236 companies went into liquidation in February compared to 192 the same month of last year. And 31% were in the construction sector, which is clearly still feeling the pain and the tail end of the economic slowdown. Next week, we've got an official cash rate update from the Reserve Bank, and another rates cut is expected, so more relief could be just around the corner.